I'll have to be honest with you. First thing I'm going to mention right up front is it's free. I like this service when it's free because, you know, you can tie up a lot of money in different services, and from experience I found out that sometimes you can pay a lot of money and you may not be getting that much out of it.
Good afternoon, welcome to GrainTV. My name is Cody Bills, this is Logan Burgess. Today is Friday the 24th, and we had a bit of a mixed trade here in the grain complex. Let's turn over to the platform here. Corn for March delivery trading up a half penny. Soybeans trading up 7 3/4 cents. Wheat in Chicago down 4 3/4. Kansas City wheat trading off 5 cents. Logan, we did have export sales come out this morning. That seemed to be a major market mover, especially a major theme in today's trade. What did we see there?
Well, you know, it's generally supportive for corn and soybeans. Take a look at the table here. The middle column shows what was expected for current year sales here, and on the right column here we can see what was actually reported. So as I said, a good showing here for corn and soybeans, both beating the high end of analyst expectations. And for wheat here, a neutral report, in line with trade expectations. So for corn and soybeans, a little bit of a good surprise. It seems like it got the soybean market in particular excited early this morning. You know, Cody, looking at the chart though, as we were doing here before the show, is this kind of rally that you think has any staying power here for March beans?
Well, not only did we see like strong export sales, but we also heard some rumors or some talk that there may be some fresh demand out of China for delivery in February and March shipments. I think, you know, when you talk about that, and that's the main driver, I think that is kind of a fleeting demand. I think that yes, we may see some demand. Yes, it may prop us up in the short term. But when you look at this thing on the long term, we have Brazil has a significant crop down there, and it looks as though they are starting export of that crop. We also saw a private analyst company come out. They raised their soybean production estimates for Brazil up to 91.8 million tons. That's above 89 million tons that the USDA has pegged. So the bottom line here is, I think when you look at this thing over the next few months, we're going to have a lot of competition out of Brazil, and I would expect, just because we're propped up here by the short-term demand and maybe even some support from the 200-day moving average, I think we're going to cave here maybe in the next couple weeks.
You know, one thing that soybean bulls in particular were talking about today was the story that's been developing here down in Argentina. Let's quickly take a look at the current exchange rate between the US dollar and the Argentine peso. This chart right here shows that exchange rate going back to about 2009, and it's been kind of a continuing story here in the grain market, is that Argentina is a country that has experienced quite rapid inflation over certain time periods. What does that mean for the domestic grain market? Well, Argentinian soybean producers are less likely to get rid of beans during periods of hyperinflation in their country, and we've seen that here over the last couple of days. Take a look here at a daily chart. You can see that this exchange rate, US dollar to Argentine peso, has kind of exploded here in the last 2 days in particular, up about 16%. So like I said, if you're a soybean producer right now that has beans that you're still storing from last season or freshly harvested soybeans, it's kind of a disconcerting proposition to trade those soybeans in for pesos at this point, when every day you're seeing quite substantial inflation there. It's kind of a hard sell at this point. So some bulls are talking about this being a potential bullish factor here for soybeans moving forward. But I think that, like you said, kind of about this Chinese story, Cody, it's kind of a flash in the pan. When you look at South America as a whole, Brazil is the major exporter down there, and the Brazilian real has remained relatively stable here in the last couple of months.
Yeah, absolutely. Now let's just switch over to domestic demand here. One thing we can focus on is the cash market. Now, on average across the U.S., we did see basis fall about 2 cents here. What were the major areas that we saw movement here? Where did we see the biggest declines in basis for soybeans?
You know, we saw pretty large declines out of the Gulf, down 16 cents over the last week. That's a very big move for Gulf soybean spot basis in 1 week. That really seemed to propagate here throughout the major river systems. You can see along the Illinois River and additionally out there along the Ohio River. We saw quite widespread weakness there, down 20 to 25 cents at some locations. So I think, a lot of times when you see futures back off quite a bit, we see basis respond a little bit, but it seemed like this week that maybe these basis declines kind of enabled futures to continue to move lower. There's a lot of weakness right now in the spot soybean market, and it seemed to be reflected on the board in Chicago.
Yeah, that's definitely a concern, Logan, especially when you talk about the weakness. We've had this cold snap go throughout the Midwest, and we're still seeing basis fall. Typically, that kind of chokes the flow of cash grain, and you see basis increase to draw the grain out of the bins and kind of get those kind of go-hard producers that that could deliver in that cold weather. Bottom line here, guys, just keep in mind that soybeans here is looking maybe a little bit weak, even though we did have a positive day today.
Yep.
If you're interested in following the markets and you want to do so on your mobile phone, go ahead and take a demo of the trading platform here. You can visit us at grainhedge.com to do that. Thanks a lot for tuning in. We'll see you here on Monday.